your latest deal, was that your largest transaction to date?
It actually was, interestingly enough, it was not the largest transaction, but it was the largest raise. So that particular transaction was 49.955 million,
Okay.
and we raised 19.4 million on that one to acquire it. And
Okay.
then the one prior to that was a $51.5 million project, different debt structure and business plan. So of course you're not going to raise the same amount. We only raised 14 million to acquire that one.
Okay. Only 14 million.
Yeah. Kind of a small raise now, right?
Yeah. So, in terms of, we're here today. You started you're under contract. I think kind of as COVID hit and all that. I think in March. So, what sort of response did you get? And just if you could kind of just talk about how all that went.
Yeah. Well, I will tell you that we the way it kind of worked is that we signed the contract, and then the next week, almost right, I think it was like right before we went out with the deal, the bottom pretty much fell out of the market, and
Oh
of
wow.
course, that was it was a big kind of like. I wouldn't say at that moment was a big what I call butt pucker moment, but after due diligence and wiring the next amount of money for due diligence, that was definitely another big butt pucker moment, if you will. And so because on that particular deal, we had a lot of money on there, so we had about 800,000 that was hard day one, and then after due diligence, there was another 600,000 that went hard after that. And so there was a lot of money that was riding on that, where if we didn't close it, obviously, we wouldn't kill us, but, definitely be a big, ding, and we wouldn't be very happy at all. And the prior deal, we actually had raised 14 million on that one, like I mentioned earlier, and we raised that 14 million in 2 weeks. And so, and since that deal, I was October of last year. Since that deal, we had brought in over 600 new investors through our website. And so we knew we had a whole lot of runway on top of what we had already been doing. And so we knew we could actually raise that one pretty quick, even though it was a little bit more at 19.4. But then, of course, the bottom falls out of the market, and it took a lot more than 2 weeks to close that deal. And there was really kind of three main reasons why somebody would not invest. And number one would be somebody who at that time had lost a lot of money in the stock market when it had tanked initially. Obviously, right now it's improved quite dramatically, and it's almost like a tail black swan event, if you will, on the other side, right, where it's going up and nobody really knows why the market's doing as well it is. But that's to be the one, not the number one, but that'd be one reason. The second reason why somebody was telling us that they didn't want to invest at the time was because they hadn't been in the market, and because the market was down, they wanted to get in at the bottom to ride it up. So those are kind of hard. And I guess there was really four reasons, not just three. The third reason was somebody who, like, for example, we have a lot of professionals, like a lot of attorneys and a lot of physicians. And give you an example, we had a surgeon, an orthopedic surgeon that pretty much invests on a lot of our deals, and he couldn't invest because he goes, I have the money to invest, but right now they're not allowing me to do any procedures, and I eat what I kill, and then, yes, he's paid by the hospital, but they actually eat what they kill, even when they work in the hospital. So if he's not doing surgery, he's not making any money. And he's like, I don't know how long this is going to last, so I can't put money up and lock it up if I don't know if I'm going to need to tap into that. Because this could last a month, it could last a year. Like at that time, nobody knew how long it was going to last. And so that was one that was just like, I understood, I can't, like, there's no way I'm going to convince that person to invest at that time, right? And then the fourth one was one that it was an easier one to kind of counteract, and it was somebody who basically wanted to sit on their money and wait until deals were falling out, like literally like going into default, and try to swipe up some really deep discounted deals like you might have seen in the 2008 financial crisis, where you saw some 20, 30, 40% discounts. And that was one that was a little bit easier to kind of discuss with them, because they would basically think that they're going to get this like 30, 40% discount. And realistically, I'm thinking it's going to probably be between about 4 to 7% across the board. Maybe some of the lower end assets you might get a little bit more, but some of the higher end assets a little bit less. And then kind of like if you averaged it out, it'd be between about 4 to 7% discount. So it's not going to be as significant. And then you have to calculate the lost return on the capital or that from not investing now and waiting 6, 9, 12 months down the road as well, right? So there's a lot of that has to take into place. And then and there's some other arguments those are the top 4 ones that I had, but there were other deals that were happening at the same time that even that were being maybe we're raising money on those back in December and January that were getting ready to close closer to that the early March, mid-March timeframe when things started to fall out. And I had some investors that would reach out to me and they're like, listen, like I don't understand why you're still doing this deal. Like everybody else is dropping out, whatever. They're falling out of contract. The debt's hard to get. They can't get any loans. I mean, I personally was on a deal as a passive investor where I had wired money already in, had been sitting there for 6 weeks, and the day before closing, the lender backed out, and they basically said, "We're not loaning on this thing," and they had to give all the investor money back. And thankfully, they did. I wasn't worried about that because I know the operator, but that's they lost hard money on that deal because the lender backed out the day before closing because the market fell out, right? So those are kind of a lot of the different things and the challenges and the things that we were hearing from investors as to why they could or could not invest. And so it just took a lot more, I don't want to say convincing, but a lot more hand-holding along the process to assure them that the investment that we were getting in was the right investment for them and why it was the right investment for that particular time. And there were 2 other deals that were verbally. One was verbally awarded to us, and one was about to be, but both of them fell out because there was too many unknowns. Yield maintenance went up for the seller, and so it just killed the deals, right? And so those ones came crashing down pretty quickly. But the one that we were in was a really good, solid deal. And normally with our deals, when we're raising money on them, we'll send out an email like, everybody else probably does on this call that does, syndication. You send out an email to your investors and, they watch a webinar and they'll submit a soft reserve and you take them down the line of the process of getting them to actually fill out the PPM, wire the money, and then get to closing. And you have a very tight timeline to do that. And this one was a very tight timeline too. It was a 30-day due diligence, 30 days to close with no option to extend. Now, we did negotiate an additional extension if there were any lender delays due to COVID. So the seller was amenable to that, which I think any seller, given the circumstances, would have been because it wasn't like our fault as to why we wouldn't be able to close. That would have been a COVID-19 lender issue, but we didn't have any of those issues. So we were behind that kind of time crunch. And so we initially, that's usually all we'll do. And then, like I said before, like that last deal, we raised it in 2 weeks and that was it, right? Obviously, there's a lot of things going on in the background. There's a lot of conversations that are happening from investors and things like that. I think you guys know about that too. That people still ask questions, and you're not like it's not like I'm done. I'm in 2 weeks, right? That's usually when it usually starts to ramp up with more questions from investors and them doing their own due diligence on the deal as well. And but one of the things that was different about this deal when we were raising the money is that we had to do so many more things over and above than we normally do, like to assure them that it was the right investment. Like we did a full lease audit, which we always do a lease audit, so don't get me wrong, but we did a full lease audit and actually had to provide data based on the demographics of those residents, how long each resident, but the average age of the leases in the units, and then also the mix of the jobs that encompass that particular property. And then also the average incomes as well. And basically trying to determine what's the exposure risk for people that could be in the categories travel, leisure, entertainment, restaurant, things like that could be exposed potentially for losing their job, which could cause the property to, underperform after closing. And so we did that and published that pretty quickly, went out with our investors with that, did a webinar to explain that. And then each probably 2 or 3 weeks later, we were doing another webinar, just updating them on collection status and, due diligence items, and just really kind of letting them know like, hey, we're making sure that this is the right investment. And if at any time we feel like it's not, we're going to back out, And not only did we have hard money on that, but my wife and I invested a pretty significant amount of money on there too. I mean, we put about $1.5 million on that project alone, and so I'm not going to put $1.5 million of my own cash on a deal if I didn't think it was going to actually work, right? So I wanted to make sure that, along the way, that they understood that we were still watching out and making sure that this was the right investment all the way up to the day of closing. We closed on May 15th. So we even did a webinar even after May 1st. So I think it was like May 5th or 6th, we did another webinar because I had to wait for collections to come in so they can see where the collections were coming in. And thankfully, they came in really, really strong because it was a higher end property and those people didn't lose their jobs during the middle of COVID-19.